G'day. Let's do the lowdown on lower rates. As we know, the RBA dropped the interest rate from 4.1 to 3.85% earlier this week, making it a little bit cheaper for mortgage payers and largely for small businesses as well, don't forget, to pay their loans back. The interest bill is simply lower than it was previously. That is really good news for a whole lot of people who've had for the last, 4 or 5 years, almost nothing but upward rates. Of course, they came down in February, came down again this week. Good news for those people paying their mortgages and those small business loans. Two things I want to share with you. I'm not going to be a wet blanket, but it will be a bit of cold water. Let's go with that. Two things I want you to think about. Firstly, remember, the Reserve Bank said they are cutting rates in part because inflation is down to where it needs to be. That's getting towards it anyway. That's good. But they're also worried about economic activity in Australia, business investment in Australia, household spending in Australia. They downgraded all three of those metrics in their forecasts. Why? Because the global outlook is uncertain, is the word they use. I think we can call it that. Tariffs, global trade, the trade war, all of those things run the risk of putting the US into a recession. And if that happens, putting downward pressure on economic growth here in Australia. Hopefully we avoid a recession if that happens, but we can't guarantee anything. And frankly, the RBA is running a bit of defense for us. They're basically saying, you know what, things could get bad. If they do, we want to make sure the economy is ready to respond, is in a decent place to do it. So good news for a rate cut. Bad news that it felt like it was necessary, in part, as I said, because inflation is coming down. That's fair. But they talked about 0.5% cut. Now, plenty of people watching will be like, gee, I wish we could have that. I do too, except remember, the more they need to do this stuff, not can afford to, not can get things back to normal, the more they need to do it, what's that telling you? It tells you they're saying we are worried about the economy in the next 6, 9, and 12 months. Here's the second thing I want to share with you, and the second concern I have, probably a bigger concern, frankly, over the long term. Lower rates is great if you've got a mortgage or got some current debt. Lower rates is terrible, believe it or not, if you haven't yet bought your first home. We give first home buyers a really rough time here in this country. Prices are through the roof. The amount of deposit you need to save, the number of years you need to work for that deposit is sky high. Now think about this for a second. Yes, if you already got the loan, you just got to break. The average Australian mortgage payer, $100 a month they're saving. Add that to $100 from February, a couple $100 a month. It's not everything, but it's pretty good. That's really, really good. Here's the problem though. When you go to the bank and you ask the bank manager, how much can I borrow? And she says, you can borrow 600 grand. You go, beauty, that's good to know, thanks. What are you going to do? You're probably going to find the best place you can buy for the amount you can borrow. In fact, most people do exactly that. So what happens when rates drop? Well, yesterday you went to the bank manager, she said 600 grand. Today you go to the bank manager and say, how much can I borrow? She says, 650 grand. And you go, beauty, I can borrow more money. Except no one says, or almost no one says, I can borrow 650, but the other day it was only 600. I'm just going to borrow the 600 because that's all I want to borrow. No, you borrow the 650. And here's the other problem. Not only do you do that, but everybody else who goes to the bank is told the same thing and borrows the same amount. They all turn up to a sale on the weekend or an auction on the weekend. When the bidding starts, how much are they going to bid? 600 and stop? Save the difference? Pay less on their mortgage? No. They're going to pay the full amount because they can. It's not a criticism, it's what happens. And again, even if you want to criticize the other person, if you want the same house, you've got to play the same game because they can bid 50 grand more than you can. So what do? You bid more. What does that mean? It means for the first home buyer, the rate cut that would have otherwise had them pay less interest on a smaller mortgage, they're now paying the same interest on a larger mortgage. Now, they're not worse off directly, except here's the thing. For the next 30 years, their home loan is 50 grand higher than it would have been. It's accruing interest on that 50 grand. They've got to repay the principal of that 50 grand, more than they would have had to if prices remained where they were, if rates hadn't come down. Now, don't get me wrong. I'm not saying we shouldn't have lower rates. We should. What we've got to make sure is that first home buyers aren't punished by having to borrow more just because rates are lower. The Boffins reckon a quarter of a percent is worth about 6% in terms of house prices. Last two rate cuts, 12 percentage points of additional pressure that first home buyers have got to find because rates have fallen. There's an answer, by the way. It's called the lending buffer. You've probably heard it. The banking regulator makes the banks apply a certain incremental buffer to say, look, let's just make sure borrowers can repay a higher amount if rates go back up. What could they have done? They could have simply said, you know what we'll do? When rates come down, we'll put the buffer up by the same amount so that the levy you're being assessed at doesn't change. So the bank manager who said yesterday or a week ago, you can borrow 600 grand, today says you can still only borrow 600 grand because I'm using the same buffer, but rates have come down. So it's not going to cost you as much in interest. You borrow the same amount, but you don't have to pay back more. In fact, you pay back less interest because rates have come down. What would that have done? It gives first-home buyers an even shot. It gives them the advantage and the economy the advantage of lower rates, but it doesn't push up prices. So there you go. That's my lowdown on lower rates. Have a great time, and until we speak again, full on.